Hey, good morning, everybody. Hopefully, everybody had a wonderful weekend. Let's get right into it. I gave out a couple of stocks on Friday, gave out Boyle. What was that actually on Thursday? Boyle went up 7% Thursday, 8% Friday. It's up 6% pre market this morning. I also gave out ZIM, also a green day on Friday. You got to understand, bearish stocks are stocks that went down, outnumbered stocks that went up more than 3 to 1. So you have to pick out key stocks. With that said, stick with me. At 10 minutes into this session, I'm going to give you two stocks that I'm looking at today. One is actually a penny stock, and we know I haven't played penny stock in probably, I don't know, months, let's say. Another one is a key option play that I'm looking forward to today. So I'm going to give those out shortly. But let's talk about key news data that's going to be dropped this week. Let's remember we still have earnings going on and a lot of other information. Key events this week: pending home sales data today, consumer confidence on Tuesday, ISM manufacturing numbers on Wednesday, jobless claims on Thursday, and this is the last week of Q4 earnings. And we have 4 Fed members speaking today. All right, let's get into what I expect to happen in the market today. Now, what we saw on Friday at the close is $50 million worth of calls on the SPY towards the end of the day. Huge spike. There was a huge spike. So what did that tell me going into this week? It tells me that we're probably going to start out the week bullish. The SPY is up 0.5% pre-market. We're sitting at the 398 level. What do I expect to happen? I actually expect us to go slightly over 400 and then reject. So even though futures are strong, I'm not believing China. I'm not believing Europe. Ooh, Europe. Russia decided to cut off oil and gas to Poland over the weekend. The market, what does it do? Shrugs it off like it doesn't care. Okay, tons of earnings. Here's what I'm looking at for earnings this week coming out. We've got Target, Fubu, we have NEO, Rivian, Lee Automotive, AMC, Salesforce, Snow, Plug. I mean, there are a ton of them. AI is coming out with earnings, which is CAI. ChargePoint, Mara is coming out with earnings, so that could be a boost. Dollar Tree, First Solar. So a lot of companies coming out with earnings this week, paying special attention to the ones that I just mentioned. Okay, let's speak about, I don't want to talk about the SPY yet. We'll get to the SPY. But what did I see on Friday? Towards the end of the day, I saw major call action, just like I mentioned on the SPY. Same thing for Meta. They went out to March 3rd for the 165 calls, spent 1.3 million. They went out to May 19th for the 175 calls, and they spent 1.18 million. And they went out to September and they wrote the 170 puts for 4.7 million. So they took premium on the puts out to September. So they're telling me by September, they're pretty freaking confident that Meta is going to be over $170. Well, that's where it's sitting right now. So they're saying between now and September, Meta will be higher, and they're securing the premiums there. And then with their call options of the 165s and the 175s, they're obviously looking to make profit. So again, they're telling me tech has sort of stabilized along as big tech. We've seen NVIDIA. NVIDIA was 245, went down to 208, is back at like 232 again. So they're over the hump, let's say. I gave you the key events. Okay, since February 1st, things that we've seen. Odds of a 50 basis point rate hike in March. Okay, the next time the Fed meets, 50 basis points was at 2%. There was a 2% chance. Then that 2% chance went up to 17%. Now that 2% chance is sitting at a 30% chance that we're going to see 50 basis point rate hike in March when the Fed meets. I believe it's the first week in March. What is that telling me? Should put downward pressure on the market. So I just gave you mixed information. I told you the market looks bullish to me for the time being, all the way up to like 401 on the SPY, but I'm expecting some downward pressure in March. What about that Meta play that I just mentioned? Well, shoot, that one's going out March 3rd. We haven't heard the Fed speak. We won't hear 50 basis points until after March 3rd. So that explains that one position. Then you go out till May and September, kind of opposite positions. Again, they're securing more premium on those puts, on the Meta puts. Okay, the VIX is up 27% in the past couple of weeks. Mortgage rates are back above 7%, which is telling me the housing market is still struggling. Earnings seasons, 82% of S&P companies that gave negative guidance. Well, shit, that's a big freaking problem going forward. 82%. Again, I mentioned two stocks on Thursday and Friday, both up and up. We talked about Zim and Boyle, right? Boyle being natural gas, which I believe had bottomed. And I mentioned that on Wednesday, Thursday, and again Friday. I'm still in a position with Boyle calls. Again, up 8% pre-market. Again, in about 4.5 minutes, I'm going to give you two stocks, one penny stock and one options play that I'm looking at to get into today because I know they're going to make money. I know I usually don't do that, but when I see something I really like, I tend to share it. With that said, Walmart, I heard people talking about Walmart, Target, things of that. Walmart insiders dumped $750 million of stock this past week. So that's pretty significant. I mentioned earnings calls. You have Zoom, you have Lowe's, Dell. I mean, there are just so many companies that are, again, reporting fourth quarter. Neo and Salesforce, that's on Wednesday. Target's on Tuesday. I think I'm ready to talk about the SPY. Oh, one more thing. Tesla call sweeps came in on Friday with a strike price of $220. These are expiring March 3rd. So that's telling me by the end of the week, people are assuming Tesla's going to be up another 10%. It's right about 200. Maybe it's at like 202 pre-market or 199 somewhere. I mean, it fluctuates. But again, the calls were bought with a below bid. The calls were sold with a below bid offer. The price of Tesla, 196.92 at the time. Do I think Tesla's going up 10%? Well, we know it's leading the way in the Qs and with tech. If tech continues its push forward. Now, tech is definitely stronger than Dow stocks right now. Again, Friday, Thursday, I spoke about how I expected Lucid and Carvana to go down. Carvana off terrible earnings, Lucid off terrible earnings. Have I given up on those positions yet? I see the market could pop a little this morning. But again, if I'm looking to invest in a couple companies, it's not going to be Lucid right now, and it's not going to be Carvana. I would rather have companies with or ETFs with positive flows. Okay, you'll hear me talking about flows a lot, inflows, outflows. Again, I'm still looking at Boyle and Zim. They both look strong. I mentioned on the SPY, we're going to talk about the SPY right now. On the SPY on Friday, we had crazy good volume, over 105 million, with strong purchases right at the end of the day. So again, that is telling me that we could pop back up to resistance. And I will talk about the resistance levels, but I'm seeing slightly over 400, possibly 401. Let me just see if we had anything else. Yeah, I gave out a horse over the weekend to my Discord. The owner called me up and he said, my horse is going to win this weekend. And I said, okay. Tampa Bay Downs, 2-1 it paid. So, that's a great return. Again, I didn't get out. I was playing nurse to my kids yesterday. Kind of sucked. One of them has strep throat and the other one I had to take to the doctor. So let's go over. Let me just find my SPY ranges. Okay, got it. So what do I do to start the day? You know what? Let's get right into the two stocks. Then I'll talk about SPY ranges. Okay, so here are my two plays. We'll start with the penny stock. The penny stock, when Wish, W-I-S-H, shot up to like 93 cents last week. I said I'm looking at it, but I'm going to wait for it to consolidate because it had a huge run up. So now that we had some tough days in the market, I think last 3 days in the market were kind of tough, especially from Wish. It went from 90 cents back down to 50 cents. I'm looking to get back involved with Wish. Now, how do I enter into a position when it comes to stock? I use my 25% rule, which means let's just say I'm going to put in $10,000 into Wish. And just buying stock only, what will I do? My first purchase will be 25% at 50 cents. If it declines 10%, being 45 cents, I will purchase another $2,500 or another 25% of that position. Okay, it's called dollar cost averaging. It helps you make a mistake from jumping in and then the stock drops, because a meme or a penny stock like that, it could drop back to 30 cents. But if I buy in at 50, 45, 38, and 30, that would make my average cost right around 39 cents. So when it pops back up, I'll still be under 40 cents, even though it's at 50 cents right now. That's a 20% savings. Okay, my second play that I'm looking at is DDOG. It's an internet security cloud computing play. We have DDOG and we have Net, which is Cloudflare, two of the industry leaders. Personally, I like DDOG a little better. When I see some inflow going in, even though the market's been extremely brutal the past few days. Remember, last week was one of the worst weeks of the year. Yes, the year just started. But again, I'm looking to be bullish on D-Dog. I'm looking to be bullish on Wish. I'm looking to be bullish on Boyle. If I was going to be bearish on a stock, I haven't really found one that I like. It's more about playing the S&P, looking for a rejection level. Okay, so I mentioned the S&P. What do we do to look at the S&P? Well, we bring up Discord. And if you want to join Discord, it's right there. Whoa, it's right under me right there. It's soc-platform.com. You join Discord, you get some updates, you get Romeo's live trading. But me, I love to look at the Flow and Algos channel. So that's what I'm sharing with you. And no, it doesn't get any bigger. In fact, it gets a little smaller if I made it smaller, but now I'll enlarge it. So what am I looking at? I'm looking at key levels where we have the most excess supply or demand. So 413, we're not even close to there. 411, not close. 408, not close. 406.48. Important, because if we break over 400 and we have a bullish week, let's say we have Monday, Tuesday, Wednesday, something to that extent, I would be looking for 405.48 to reject. Again, I will check this every morning because these dark pool levels do move based on the dark pool activity. Now, again, what is the dark pool? And then we'll talk about the levels. The dark pool is like an off-market exchange. It's like I often compare it to the real estate market. You're selling a house, but you don't want to list it for everybody to see. It's called off-market. So these people don't want everybody to see you're selling SPY or buying SPY, selling Tesla or buying Tesla. If you're a hedge fund or an institution and you're looking to buy a shitload of Tesla, you don't want to do it on the open market because you're going to push the market up and it's going to skyrocket. And all of us smart traders go, holy shit, someone's buying block shares of Tesla. So what do? They go to the dark pool. Understand, over 50% of trading in the market, over 50% of shares that exchange hands on a daily basis happen in the dark pool. So over 50% of the market, you don't know. It'd be like watching a football game, being told the final score and only being allowed to watch half of the plays. It doesn't make sense. It seems a little manipulated, but again, that's how it is. That's why we have to use the dark pool to cheat to our advantage. So let's go back to those dark pool levels. Again, bull case scenario, I'm looking for 406.48 to reject, not necessarily today. If I'm looking for today, where's the largest dark pool level? Well, I'm seeing 16.18 billion at 399.50. So let me just get off my list here and let's just see where the SPY is sitting. Pre-market, it's up. Whoa, it even shot up even higher. 399.78. So this is perfect timing for that. Okay, the SPY is sitting at 399.78. Well, 399.50 is a huge either support or rejection level. Okay, so let's say 399.50 holds. And when I say that, I mean plus or minus 20 cents. So you're talking 399.30, 399.70, which is exactly where we are this morning, pre-market at 8:43 a.m. So what is likely to happen? If 399.50 in the dark pool level holds and it becomes a demand area, we could easily push past this ghost zone. I say ghost zone because you'll notice only 3 billion and 2 billion at 401.83 and 404.16, telling me there's no huge demand supply at these levels. So we could easily push from the 399 level all the way to the 406.50. So you want to give me an extremely bullish day, I'm going to say, okay, market's going up 3%. Now, it's not probably going to happen today. If it was to go up and there was to be 3 consecutive days or 2 consecutive days, you might get 1.5% today. You might get 1.5% on Tuesday or 1% on Tuesday and 0.5% on Wednesday. If you're looking at 3% gain and you're talking about 406 on the SPY, I'm saying bull case scenario by Wednesday. Okay, we will talk about bear case scenario because this 399.50 plus or minus 20 cents, so we could be right where we are pre-market, could turn into rejection. But if it were my opinion, again, after the sell-offs last week and after the strong call buying that I saw at end of day on Friday, both on the SPY, Meta, Tesla, I saw NVIDIA, it tells me I could be possibly bullish on the market. So again, 2 scenarios. If I want to be bullish, I say, all right, well, the SPY closed at 396.38. What's likely to happen? Well, we could probably get a dip, and look at the SPY levels again. We could probably get a dip. This would be your bull case scenario. Market opens. We closed at 396.38. Market opens, we're sitting right around 400. Market dips. Where does it dip to? I look at the next level. The next level of support or resistance could be this level right here, 397.16. So I say to myself, okay, plus or minus 20, 30 cents. Let's make it easy. Bull case scenario for the market today. The SPY starts out within the first 20 minutes. We see a dip, a sell-off all the way to 397.50. I'm not going to say 15. I'm going to round up a little, half a dollar, so 397.50. So we're sitting at 399.78. Okay. So I'm going to say, okay, the market's going to drop. It's not going to drop to flat or red today, but it'll drop to just slightly green, and then it's going to shoot back up. It's going to shoot right back up to the 399.70 level where we are now. So we're at 399.70. Market's going to open within 20 minutes. We're going to drop to 397.50. So we're going to drop about 0.5% or about 2 points on the SPY. From there, we're likely to see support right at that dark pool level, and then we're likely to shoot up slightly over 400, 450, 401. That might reject. That's what I would be looking for. However, like I mentioned, ghost zone at 401.68, ghost zone at 404. So bull case scenario, we drop to 397.50 and we shoot up towards the direction of 405, 406, where the next probably supply zone is. Okay, that's your bull case scenario. Let's go to the bear case scenario. Bear case scenario is, let's explain why first. 50 basis point raise in the market. Soft landing doesn't really make sense. Job numbers are coming out mixed. Fed is saying they're still aggressive. Understand the Fed still has to reduce their balance sheet. Their balance sheet that went from $3.5 trillion all the way up to $9.5 trillion is only sitting at like $8 trillion right now. Remember, they want to get their balance sheet back down to $3 trillion. So there's going to be a lot of balance sheet sell-offs from the Fed once they understand that they're not going to push the economy into a massive recession. A slight recession, yeah, likely. Okay, so again, that's going to be your bear case scenario or reasons for your bear case scenario. Again, we have the housing market, we have jobs data, we have consumer confidence, we've got the greed factor. So here we go. Bear case scenario. All right, market strong pre-market. We're sitting right now at 399.75. Let me just see if I can pull that up for everybody. Let's remove it. Stop sharing. Let's present, and let's get the SPY on here. Here we go. See if you guys can share it with me. Here we go. Add it to the stream. Okay, great. So I've got the SPY up right now. Again, I'm about to give you your bear case scenario. I'm just showing you right now. We're sitting at 399.74. Major dip to start out Friday. Traded a smaller tight range, a narrow day. We got about 394 to the high side, about 397. Again, we're opening right here this morning. Let's just go to the 4 hour and see where we sit. Okay, on a larger scale, we're looking at 399. Again, I could see rejection right around this level, 401.50, which is what I mentioned. If we pop and break through, you're talking about the next line up right here at 406. Okay, so hopefully everybody saw that with me. Again, I'm going to give you the full case scenario. Full case scenario is there's a ghost zone between 400 and 406. So your bulls are saying, okay, we dip at market open, we touch 397.50, and we're heading up to 406. That's your bull case scenario. Your bear case scenario is, okay, we're sitting pre-market at 399.70. Bull case scenario is, boom, we take that and we run up on market open and we go all the way to about 401.50 and we reject 401.50. Now, we won't reject it once. We would most likely, if we are going to what looks to be a bullish open on the market, you're probably going to need to reject it 2 or 3 times. So we're going to go up to 401, reject it, 401.50, reject it, 401.50 or 401.40, reject it. If I see a rejection 3 times and the third point is lower than the second point, then I'm going to say, you know what, it's going to be a bearish moment from the 401.50, and we're going to go back down, and we're going to go back down till 398. So again, bull case, 397.50 on the low. I'm looking to get out at 401.50. That's a 4-point move on the SPY. That's my bull case scenario. If I see 397.50 and a sell-off or drop it open, I'm in calls. I ride the calls up to 401.50. That's my bull case scenario. Reversal at open, we're holding the 399.70 and we shoot up to 401.50, and then we come back a little. Nope, I'm waiting on the sidelines. Then we attack 401.50 again, and we come back. Nope, still waiting on the sidelines. Then the third time we attacked 401.50, except it only gets to 401.40. It's a little lower. And I say to myself, okay, we've rejected 3 times. We're going back down. So from 401.50, 401.40, I say we're going back down to 398. Well, that's 3.5 points on the SPY in a bearish direction. So again, I haven't made up my decision today how I'm going to trade the market. I'm going to look at open. I'm going to look at the volume. That's what I do. Want to bring up one other thing. This is more of a lesson. It's about risk management. Okay. This is the problem that I used to fall into, and I'll just use smaller numbers for now. Let's say I use $1,000 a trade, take $1,000, make it into 2,000, another 1,000, make it into 2,000. Let's say I have 6 or 7 winning trades. Well, now my $1,000 is up to about 15,000. My 7th trade, I go, okay, I'm just on fire. Here's what I'm going to do. I go into a trade. It's a losing trade. Instead of selling and taking the loss, like Romeo explained, I average down, and I keep averaging down until I have my whole $15,000 into that one position, which turns out to be wrong. Now I'm back down, and that 15, when you lose on a position where you keep averaging down and you turn to be wrong, you can lose 90, 80, 85, 95%. Well, 95% of 15,000, and we're going all the way back down to where we started from. So it's about money management. You could have 7 great trades, 1 losing trade. That 1 losing trade can suck up all of your profits. So that's just something to be wary of. Again, I've given you the bull case scenario, the bear case scenario. I mentioned 4 stocks, 2 of which I spoke about last week, 1 of which, Boyle, I'm still carrying a position, and 2 new stocks that I have not entered into this morning. I mentioned it about the 10-minute mark. So we're going to get to some questions, and I'm going to head over to Discord. Let's see what we got. Okay, Zim, good morning. What do we got here? Zim, cash on the daily. Which strike do I recommend? Okay, so if you're going to get involved with Zim, see, I don't like to chase. That's the thing. And if I think the SPY could possibly reject 401.50, yes, the market looks strong pre-market, but understand only the smallest 1%, if not under that, happens pre-market and after hours. So me seeing this run up, I'm saying, okay, I know there's a ghost zone all the way up to 406. However, should the market be this strong, this instantaneously? Do we trust China, the European market? So I'm going to say, you know what? I'm not going to get involved. I wouldn't get re-involved with Zim calls right now. But if you wanted to, if you had to get involved with Zim, God, I would so wish you'd wait for a pullback. The pullback could be all the way down to the $21.90 level. So again, I mean, this is what your chart on Zim looks like. You don't want to buy right here at the top thinking it's going to shoot up, because we rarely see and then we just up, 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 up. No, there's got to be a pullback. So I'm saying if you want to get involved with Zim, I want to look at the $21.80 range, something like that. I want to make sure volume's pretty decent, and that's when I would get involved. And again, if I'm doing that, I like to be in the money. I've changed it. Instead of being risky and getting those 300, 400, 500% returns and going out of the money and hoping the stock runs up 5, 6, 7%. If I'm in the money and the stock goes 20 cents higher to 80 cents higher and I'm in the money, I know I'm going to make money on those option plays. Yeah, so you need to have a good week. Yeah, hopefully we all have a good week, man. Let's see what you got here, man. You had $26 calls from a while back that expired Friday, bought a few more on Thursday, Friday, looking to average down. Okay, so again, averaging down versus cutting your losses. Me personally, when I feel good about a trade, and again, it's about having confidence and knowing that I'm going to be correct about a position, I will average down. A lot of people on our Discord, on the platform, Romeo, Love, they don't like to average down. They put in their stop loss as the stock or the ETF goes higher and they're making money. They're moving up their trailing stop loss. So that seems to be very safe and secure play. Remember, I love to secure profit. Bearish on coin. Me personally, I haven't really looked at coin. If I was going to make a play on earnings, I would make a play on Mara earnings this week. You might want to use Riot, which is a quick offshoot. Again, coin's been selling off 5 out of the last 6 days. From when it peaked at like $71. We're back at that $58 range. Where could coin go to find support? Well, not much lower. If coin was going to go lower, it could go to about $56, and that would be support. Right now, it's sitting at 60 pre-market. So no, I'm not bearish on coin at all right now. I'm more neutral. Again, if I wanted to make an earnings play, I would have to do my research on Mara. So if I was going to make an earnings play on a crypto stock, what would I do? Of course, I have to remove this to show you guys what I would do. Share screen. Let's get back to Discord, and then I'll answer our last few questions. So Discord, what would I look? I would check out the, let me just make sure, net flow for Mara. Let's see if I can pull that up and make sure I'm sharing this with you guys. Let's add it to the screen. There we go. Okay, so what would I do? I'm looking at the net flow for Mara. I'm looking at the stock price. Here we go down. Cost for premium for calls right around here, negative 0.3. Premiums for puts, again, negative. So it's telling me that it's too early for that one. Let me just see if I can find something else to see the net flow for Mara. Yep, about the same chart. Let's look at the net flow for D-Dog, which is one of the stocks I mentioned this morning that I'd be looking to get a little bullish. Okay, so the cost for calls staying fairly consistent. The cost for puts, or the premiums for puts, going down. The price has come down, but we also know that the market had a past couple of days were tough. So again, this is actually, for me, showing support. Let's see what the algorithms say. Algo flow, D-Dog. Okay, yeah, and the algos are telling me, yeah, the stock price should go higher. The algos, they should meet somewhere in the middle as they crossed over here. They crossed over here, and they crossed over here. Now, if you draw a line through these crosses, you're looking at a bullish momentum stock. So, yeah, another reason I could be bullish D-Dog. Okay, what are we looking at here? Wanda, thoughts on LHDX? I don't even know that symbol, to be honest with you, but I will. Was that like, is that Louis Vuitton or something like that? Probably not. I probably just know. Lucira Health. Okay, so any healthcare companies, I mean, you're talking about a 14-cent stock that is probably a meme stock. They probably have a valuation, a market cap of $5 million. Yeah, their market cap on this stock is $5 million. So, I mean, if I'm going to look at LHDX, here's what I want to do. I want to go on Fintel. I want to look at the short interest. I want to look at how much they're paying to buy shares of this stock if they're being lent out. I want to see if there's a possible squeeze, because anytime you have a company that has a book value of $5 million, it could easily go out of business. They could easily do an offering. I mean, the stock's at 14 cents. So, yeah, thoughts on that one? Volume was decent for the past 2 days. Not since January 3rd have they seen volume like that. And again, most days, volume's even less than that, and it seems to be fading anytime it runs up. So I would be extremely cautious there. Again, if I want to be involved in a penny or a meme stock, I want to mention there's going to be support. I mentioned AMC, like a week and a half ago, it was $4.80. It shot up to $6.50. That's the time to get out. You take your profit. If it goes up $1.70, you're like, holy shit, I just made 32.3%. I'm going to get out if you make 32.3%. Again, my penny stock that I'm interested in is Wish. Why? Because at 50 cents, 40 cents, wherever it goes to, 50, let's just say I get in 45, 50, something like that, I think it can run up to 80 cents. So if my average is, let's say, 47, and I get in today, tomorrow, the next day, and I wait 1, 2, 3 weeks, and it pops up to 80 cents, you're talking about a return of 33 over 42, probably like 74%. That is a good risk reward benefit. A stock that's 14 cents, I don't want to get involved with unless I knew something about it. Let's see. You like the idea of out of the month expirations, even if you don't hold that long, or is that leaving too much money on the table? Month out expirations. Okay, the safer play when you're investing, if I'm going Microsoft, if I'm going NVIDIA, if I'm going Google, and I want a safer play, it's like owning stock almost. If you're day trading options and you're going out till just this Friday, then that's more of an option swing trade. You're looking to get in, you're looking to get out. So if you're a swing trader, meaning you're a day trader, you're in, you're out, then yes, you can go with the shorter term expirations. If you're a little safer and you're just not looking to crush it every day, you're looking to make 300 today, 400 the next day, 800 the next day, 600 on a consistent basis, then yes, a much safer play is to go out a month, go out 2 months. If you wanted to be extremely safe, you can do a one-off. Basically, you could buy like the 160 calls and you could sell the 170 calls. you could make profit or lessen your position from the spread. That way, if the stock goes up from 150 to 170, boom, you just made $10 in your calls. The premium that you collected on the 170 offshoots what you paid for the 160. So that's what you could do. All right, let's see. CRM chart looks bullish before earnings call. Okay, yes, earnings are coming up. Institutions love Salesforce. So when I look at somebody that has earnings call later in the week, the first thing I say is, what do institutions think about the stock? How much institution ownership is there? So the first thing I would do is I'm just going to look at CRM real quick. CRM, Salesforce. Look at last orders. Okay, let me look at the company and profile. Let's just check out the profile here. Okay, institutions. They own slightly under 79% of this company, while insiders own 3.1.4% of the company. So together, institutions and insiders for CRM own over 80% of this company. That tells me, okay, decent earnings, and Salesforce is one of the industry leaders in their industry. Institutions like them, funds like them, long-term investors like them. So yeah, it could have a run up before earnings. That's the thing. It could run up before earnings. You could get that implied movement, and some of it's going to come in earlier. So yeah, I mean, that's an interesting play for the week. Let's look at, what are you looking at? Costco chart looks bearish going into earnings. Puts, again, the problem with Costco is it's more of a retail play. I've heard inventory numbers are a little high. Inventory numbers drive up costs. When costs go up, earnings go down. So I haven't actually looked at Costco. Again, real quick, your watch list or the number of stocks you follow personally, you should condense it down to 10 stocks. That way you understand these 10 stocks or even less than that on a daily basis. You know what their daily move looks like. You know how many points they tend to move. Oh, on a good day, it'll go up 2.5 points. On a bad day, it'll go down 3 points. You want to know this so it tells you to go in and out. Actually, if I was to be anything in Costco, chart looks pretty bad, but there's buying of Costco. There's inflow. If it were going to pull back, I could see Costco going to 483 before it bounces higher. Right now it's at 488 where it closed on Friday. Pre-market, it's at 492. So yeah, I mean, Costco actually looks semi-decent. I'm just looking at the last couple of earnings plays. Yeah, but we were in bearish type market before that. Yeah, it kind of popped after earnings. So Costco, I would stay away from. It kind of looks like it pops a little right after earnings. So no, I would stay away from puts there. With that said, let's just go over SPY one more time. Then I'm heading right over to Discord. Hopefully Romeo is going to be live trading today at 9:15. If you want, please come join us. The link is right below. Okay. Bull case scenario, we dip at market open on the SPY to 397.50, and we shoot up all the way to 401.50, a 4-point move in the bullish direction. Bear case scenario is we're opening at 399.70 instead of dipping it open like your bull case scenario. Yes, dip and then rip. Your bear case scenarios, we rip and then dip. So you're opening at 399.70, let's just say 400. We bum. We shoot all the way up. Bum, 402, 401.50. Reject. Try it again. Back to 401.50. Back to 402. Reject. Try it a third time. It only makes it to 401.40. That's the case. I say, okay, shit, I'm turning a bear today. I'm buying puts. Today's Monday. I'll probably go out till Wednesday, but I'm looking to sell today. I'm looking to be in, out, secure my profit. And I would ride the SPY down from 401.50 or 402 all the way to 397.50. So that would be, or 398. Let's just say if I get in at 402, I'm going to ride it down to 398, which would be 4 points. So either way, I already know the SPY range generally trades anywhere from, 4 to 5 points in a daily basis. So if I call the bottom at 397.50 and getting calls, boom. If I call the top at 402 and we head back down to 398, there's a 4-point move again. So that's what I'm looking at. Sarah, I see your quick question, then we're going to head over. Any thoughts on Snow? You got calls last week, $230, $721. They have earnings this week. Okay, Snow is a lot like CRM. Snow has, let's just check out the institutional ownership there and the insider. Snowflake. Okay, so they're selling off a little, but the market's been tough. It popped all the way up to 177. Yeah, I mean, just looking at the chart without even doing any analysis on it right now, I'm saying you'll probably get a pop to that 177 by, in the next 2 weeks. So I would sell any spike I see to 177, something to that extent. Okay. Institutions, 68%, insiders, 9%. So again, you're around 77%. That's a pretty strong. So I'll go back to the chart for this. Again, you're in the 230s. If I'm looking at the 230s, I'm going to say the last time you were at 230 was February's high of last year. So I think 230 is kind of out of the question. So I'm going to tell you, Sarah, you get that pop up to 177 and I get the hell out and secure profit. That's the best I can say for you. Again, please join me over to Discord. Please use the channels when you join. Use the flow and algorithms. Look at all those